Hey, it's Chuck here from the Charlton LePage Real Estate team, and this video is all about the numbers behind investing in real estate. And so we're based out of Milton. We do work in a lot of the surrounding communities, but we get asked definitely multiple times per week, I'd like to invest in Milton, buy an investment property. So we're going to look at one that I think is one of the better ones I've seen in a while. And I'll show you what that looks like from behind the scenes, from the numbers. And really, the biggest mistake we see investors make is that they look at a house and they say, well, you know, I wouldn't live in that. And that's not important, because what is important is, what can I rent it for? What am I buying it for? What do the numbers say? And so the only difference from my experience is if you buy a nicer home, generally the quality of your tenant is going to go up. But for the actual numbers, it becomes more of a math equation than anything. So you really have to remove a lot of the emotions when you're looking at buying an investment property. It's one of the hardest things that we teach investors. And the other thing is, when you're looking at fixing it up, you're not fixing it up to your taste. You're looking at return on investment. So anyway, let's get started with the numbers. This particular property is listed at $399,000. I've put in a purchase price of $395,000, assuming we could maybe knock a little bit off. There are two units. There's an upstairs and there's a basement. I figure combined we're $2,100. Upstairs might be $1,300 or $1,400. The basement might be $700 or $800. So working the average out, we'll say $21,000. You're going to have a $79,000 down payment, which represents 20% of, it's a 20% down payment. If it's owner occupied, you may be in a position where you could put even 5% down, which would change the whole number scheme on this one. But most investors buying a second, third, fourth property, they're looking at 20% down. So mortgage is $316 in this example. So your gross rent's $2,100 times 12 is $25,000 and change. Now, smart investors will put this number in, which is the vacancy allowance. So 5% vacancy allowance of your total rent. And what that represents is 1 in 20 months, you're not getting paid. So either the house is vacant, so the other tenant's left, you can't find somebody in time, or maybe your tenant just doesn't pay. And so you want to put that into the equation. You want to work that out and say, do my numbers still work if 1 in 20 months I'm not getting paid? That's a realistic number that most investors use. If you have additional income from laundry or parking, you can put it in here too. Net revenue ends up being $23,940. Then you're going to have expenses. So your property taxes are $2,400. Insurance for the year is $500, and I put a figure of $3,000 for repairs and maintenance. Nothing for heat or hydro or anything like that, because that's all the tenant that's going to pay that. But the repairs and maintenance, you're going to have to paint every once in a while. You're going to have to redo some floors. There's toilets that break. There's fridges. All the regular maintenance of a home like this, which is in an older neighborhood and has some years behind it. We've got to put a number in here that's realistic. And a good budget is probably about 0.5% to 1% for anything that's over 20 years old. If you buy a home that's 5 years old, you may only need maybe $500 to $1,000 a year. So your total expense is $5,900. Your NOI, which is your net operating income, is $18,040. That's a very important number in real estate. So mortgages right now at the time of this video are at 3%, so they're very low. Amortized over 300 months, you're looking at a payment of $14.95 a month. And after all of that is taken into account, the taxes and everything else, we're looking at a cash flow that spits out of here of $7.88 a month. So after this whole scenario has been painted, we're looking at that kind of income, which probably doesn't excite you. You could probably buy maybe 2 lattes at Starbucks for that. But remember that the tenant is paying off the mortgage every month. And so there is some extra benefit there beyond the cash flow. But in my eyes, and most investors believe that really the bottom line is, what is your cash flow? That's the most important thing, because properties can go up in value, they can also come down in value, but every month I want to know that this property is going to make positive cash flow. So that's a bit of an example right there. Your cap rate in this example is about 4.56, which means you're paying your property off probably you're paying your initial investment off, your recapture, your capitalization, you're paying it off between 20 and 25 years. At that point, you're going to have all of your original money back. So that's how you analyze an investment property. In terms of Milton, this is one of the better ones I've seen in a while. For other areas, it's not unusual to find investment properties $200, $300, $400, $500 a month easily, and so there are options out there. If you're interested in learning about that, give us a call at 905-693-9346. And there's a lot of hype out there. There's a lot of programs that really, I think, are kind of bogus when it comes to investing in real estate. So if you want the truth and the facts and the real deal about how to get your investment property, give us a call. Now, final thing, the biggest fear for most people is how do I make sure I get a good tenant? 5 quick things you can do before we end this video. The first thing is you got to meet them in person. So make sure you look at the physical signs of how they keep themselves, how they keep their car. That's important because that's probably how they're going to keep the house. You want them to fill out a full rental application. If you'd like one of those, you can send us an email or give us a call. You want to check the credit score. What you're looking at generally is something higher than 600 if possible. That tends to be my ideal. And you also want to see what lines are open. A lot of times you're going to need some help to read that. Make sure you get the credit check with the score and make sure it's recent. And make sure it has their name on it. So a job letter is always a good thing to know what kind of income they have. I'm usually looking at, I want to multiply the rent by 4 times, and I want to see that they're making at least 4 times what the rent is in a perfect world. And checking reference, especially previous landlords, is very important. A lot of landlords don't do that because they don't want to invest the time. But in Ontario, having a tenant in your property that's not paying you or giving you problems is very difficult because the rules are definitely in favor of the tenant more than the landlord. So you've got to really do your homework up front. Is it a perfect science? No, but you will eliminate a lot of problems by going through a thorough screening process up front. So my name is Chuck Charlton from the Charlton Advantage Real Estate team, and we'll talk to you later. Thanks for watching.